We got a fresh call from Goldman Sachs this morning saying that they now expect a cut to be in September. Initially, they were talking about, most recently, they were talking about July. What do you view in terms of the timeline, given what you're saying about the policy not being so restrictive?
I think here the trade is for next year. Yes, we might have one cut this year. Our forecast is still for 0. But the reality is there's still a lot of cuts that are priced in for 2025. And I think that is wrong, especially with the outlook that we have for elections. We're going to have a lot of fiscal stimulus next year, regardless of who wins. But there are some scenarios where there's even more fiscal stimulus than the CBO is expecting for next year. So we have persistent fiscal, and the 80+ basis points cuts that we are seeing in the market for next year are not going to happen in our view. So yes, we might have a cut, but it's going to look like a policy error in our view. And even other central banks are starting to change the narrative. So we need to learn to live with higher for longer. And there's a lot of asset allocation that has been centered around the expectation of lower rates. And that's going to have to reprice.
Kathy, I know you also think cuts could be delayed in a certain scenario till 2025. But Alberto there is talking about potentially the fiscal impulse we'll also get in 2025. How much harder is that going to make the Fed even to cut next year?
Yeah, I'm not so sure we get a lot of fiscal stimulus next year. Certainly, if we do, then that would delay, or dampen Fed rate cuts. But I think, from my perspective, we are seeing some moderation in economic activity. Right now, it's just the first step. And there's a long ways to go in terms of economic activity and also inflation. But we're still hopeful that we do get some further drop in inflation, particularly we think rental inflation. But the problem is it may be brief, right? Because we've seen some signs of rental inflation picking up and home prices picking up. The problem is there's long lags, right? Typically it's about 12 months. This time it seems to be longer. But so we're hopeful that we do get further cooling in inflation. I think that's really what matters most for the Fed. And I would agree with Roberto, there's like a tale of two economies going on right now. If you can come to capital markets, you're a large corporation, and you termed out your debt, you're in pretty good situation. But if you're a small business, or if you're a middle income household or lower income, you're a variable rate borrower, you are feeling the pinch. And I think higher rates have had an impact. Look at the housing market. The existing home sales market has been essentially stalled.